Ben, what's your assessment of the CHIPS Act? Because it's going to take a long time for the United States to catch up to Asian markets, no? I mean, what does that do to you in terms of your investment strategy? Any changes?
Yeah, I mean, to your point exactly, it's a very long-term plan, and to be very frankly, given how complex the Congress is in terms of passing any of these bills, I think in the near term, the U.S. will have to obviously continue to rely on Asia in terms of really delivering those chips to the West. So this is why within the multi-asset strategy, tech remains to be our preferred play, in particular Asia tech in the Korea space and also in the Taiwanese space, where that's where we continue to see some value despite the volatility that we're seeing in the markets.
I mean, it's a $280 billion bill, and we're at 12% now, whereas we used to be at 31% in terms of chip production. I mean, in terms of that timeline, how quickly do you think that the United States could actually be a competitor to counterparts in Asia?
I think it's going to be a long time.
Purely from a market's perspective.
Right. I mean, from a numbers perspective, it sounds great. I mean, that's usually the case for many of these U.S. bills, to be honest. I think, but when we actually look at how the infrastructure needs to be set up in terms of factories and stuff, it's going to be at least a 5 to 10 year framework in terms of really the U.S. in terms of relying on themselves as opposed to actually relying on Asia. So I think in the close 5 to next 10 years, it's still going to be relying on Asia, and in particular Taiwan and Korea, to deliver those chips to the West.